Good morning, Paul Georgie from Allendale. It's October 13th, Thursday morning, and the USDA report is out of the way. Now we go back to focusing on some of the macroeconomic situations that are happening around the world. And overnight, China released their some economic data there. Trade surpluses have slowed for 2 months in a row, and the slowing down of growth in China has got commodity prices here in the U.S. Backing off a little bit. Some profit taking there as we're seeing grain prices lower here overnight. Some other news out of the EU, the Slovakia is going to pass the expansion of the rescue fund, so that looks like it is going to be behind us here, but things are quiet over there. We've got a G20 meeting, financial ministers meeting tomorrow, so we'll have that to talk about over the weekend. But in the grain specifically, harvest is progressing. We've got some delays in certain areas because of rain here. Chicago area is getting rain as we speak, so that will slow down harvest on soybeans somewhat. But we moved along very well and progressing faster than normal in harvest. I think the big question right now is China demand. There's still rumors circulating and talking about China buying 1.5 million tons of corn. We have not seen any confirmation of that yet, and that's why everybody is focusing on 8 o'clock this morning, when the USDA normally puts out the daily sales, export sales. So we'll be watching that to see if there's any confirmation of China. If we don't get it today, the trade's going to be scratching their head here again and saying, well, maybe this is not happening, and another so-called crying wolf here for the export side of things. So that's going to be watched very closely, and then I think we have to decide what direction this market's going in. And I think the time of year that we're in right now makes it even more difficult to get a trend going in this market, because we do have supply coming in. Our corn harvest is moving along. Soybean harvest is going along here in the U.S. and in some areas it's good, some areas it's not. And the trade right now doesn't have that extremely bullish enthusiasm. We need something to help us push prices higher, and that usually is demand. But in demand-driven markets, we have some ebb and flow to price, which could suggest we get lower here and we set back in price. We should see some better demand there and some support in prices. So look for some fluctuation here, and probably keep us in a trading range unless something dramatic changes in the EU or in the financial situation around the world. We expect some sideways markets here as we try to work through harvest and get this crop in the bin, and then it'll be the tug of war to get it out of farmers' hands and into the end users' hands, and we'll play with that here later on in the year. So look for a sideways market here in the next several weeks, and stay in touch with Allendale. We'll keep you informed on all these other events going on. In the livestock trade, choice beef was up 104 yesterday. Select was down 18. And the pork cutout values were down 116. This morning we got cattle a little higher, hogs a little lower. Again, trying to find some direction there. The pork complex, hog supplies are coming in more readily now as farmers get off the combines and focus on marketing hogs here after they've had a period of time of harvest. So that's weighing on the hog market. We need to see some export demand and some export reports. We do have USDA pork export numbers coming out tomorrow, so we'll be monitoring that and get that information to you. So looks like could be a quiet day here today. We'll see, and we advise you to stay in touch with Allendale's research. If you got any questions at all, give us a call here at 800-262-7538. We wish you a very successful trading day, and I'll talk to you tomorrow morning. Thank you.